10, 9, 8, 7, 6, 5, 4, 3, 2, 1, 0.
Welcome to Beyond the Ledger, where we look past the numbers to explore the stories, strategies, and expertise shaping today's business landscape. I'm your host, Shardae Layfield, and today we're diving into a topic that doesn't always make headlines, but it definitely grabs attention when it hits your business. We're talking about tax controversies. What exactly are they? Why do they happen? And what does it take to resolve them successfully? To help unpack it all, I'm joined by two of Bennett Thrasher's experts who live and breathe this work every day, James Pickett and Chris Stephens. James is a director in BT's Tax Controversy practice, where he helps clients manage disputes at every stage, from audits and appeals to penalty resolutions and compliance claims. Before joining BT, he spent, wait for it, 29 years with the IRS, serving across its three largest divisions. So he knows exactly what's happening on the other side of the table. And joining him is Chris Stephens, a senior manager also in BT's tax practice, who represents both businesses and individuals in federal and state tax audits, and has significant experience handling matters in the IRS Independent Office of Appeals. Gentlemen, welcome to Beyond the Ledger. Thanks for being here.
Thanks for having us.
All right, let's kick things off with the basics, shall we? Mm-hmm. When people hear tax controversy, it sounds pretty intimidating, right? But how would you both define what it really means?
Well, basically, what I tell people, it's tax disputes. Any kind of tax dispute or interactions with either the Internal Revenue Service or State Department of Revenue. It's something along those lines. So not everything, controversy is kind of a loaded word. Not everything's like controversial necessarily, but we step in when people need help dealing with these agencies. So it can be like an audit, maybe they've got an audit notice, they've got to have somebody represent them. There's a bunch of questions about their tax return. They need some help with that. It's a little intimidating. And we can represent them there. We handle things like collection matters where somebody gets a notice saying, this much money and you got about that much in the bank.
How are you going to fix that?
Exactly. So, or maybe they get penalty notices. Something got sent in later. The IRS or the state said something got sent in later, paid late, or what have you. There's a lot of penalties around this stuff. So maybe it's that, or maybe it's just things they file with the agencies that didn't get processed properly. So those are examples of controversies.
Right.
Not everything's necessarily we're not necessarily in a controversial or an adversarial kind of format dealing with these people. Right. I mean, I worked there 29 years. I know how to talk to them and know how to talk to them respectfully. Try to get them to see it my way.
Right.
But that, so that's just the industry's term for what we do is tax controversy. Years ago, I think it was called tax resolution, or
that sounds a lot nicer.
But somehow, I'd say 10 or 12 years ago, I started hearing the term tax controversy. So it's just what the industry calls what we do.
So what are some common misconceptions when it comes to tax controversy?
Chris, you want to?
Sure. I mean, I don't know if I really hear a ton of misconceptions. I'd say the misconceptions I hear are more so around like timing of how you handle disputes, how long things take, especially on the state side, but IRS side too. I see that a lot where people sometimes tend to think that these can be resolved really quickly. I think you have to kind of set expectations up front of how long things take. The IRS, everybody kind of knows, takes a long time to open the mail and things like that. On the state side, there might be a misconception that it's sort of simpler or easier, can be resolved more quickly. Sometimes that's true, a lot of times it's not, especially the more complex the issue or more material or dollar amount. So that's kind of a big misconception. Another big misconception, like James kind of alluded to, is that these are like kind of adversarial relationships, particularly with auditors. I think people tend to think of audits as being very like adversarial. There's like an old stereotype of like if an auditor comes to the office, you like stick them in the basement somewhere in the dark room and ignore them and then they'll go away.
Right.
But of course, like my take on that is you're just going to make them mad.
Right. And they're not going away.
I mean, if I got stuck in a dark room somewhere, I think I'd be like, I'm going to give you the biggest disallowance I can, and like make you deal with me, you know what I mean? So no, we don't take that kind of approach. We're more kind of friendly as long as you can be friendly until it's time to sort of not be friendly.
Right, right.
Until you need to be more adversarial.
Right.
So that's kind of our approach.
That's nice. Okay. All right. So now that we know or have an idea of what a tax controversy is, can you give me a sense of different types of categories? Maybe some like real world examples of what cases really look like.
Well, let's start you off with a little bit of categories. I touched on them earlier when I was talking, but they really come in four really broad areas. Whether you're dealing with the IRS, first of all, it's IRS stuff and it's state revenue department.
Right.
So it's both. And many times these things are very similar. You know, the problems you get into with the IRS, you get into similar problems with the states, you know. But basically what I tell everybody is it comes in four broad categories, and that's audits or examinations. IRS likes to call them examinations. They use that term interchangeably, exam or audit. Collection matters, that's where you owe money, that kind of thing. Penalties. And then the last area, and we get into this with both IRS and state agencies, is what we call accounts management. We named it that in our own workflow management because accounts management is the name of the division that we deal with IRS with this issue. But a lot of times things that get filed with IRS or with the various states just get mishandled. It might be a tax election. It might be a tax return or some other type filing or whatever. It just gets mishandled.
Right.
They don't do it right.
Right.
And they need somebody to interact with them and get it straight. So we call that fourth category accounts management. But that's the four broad areas we work in. And we've got funny stories in all those areas. Things
I
that
can't
have
wait to
happened
hear.
us.
So when people make mistakes doing those elections, like how does that typically happen? Is it just misinformation or just kind of going off of what you think? How does that kind of come up?
Well, we see two things as far as like tax elections where things go wrong, people filing things or companies filing things that aren't handled right. We see it both ways. Sometimes it's the client. Sometimes it's the taxpayer sending the stuff in late, not realizing, I needed to file this by this date. Now I'm a year late. I'm 2 years late. What do I do now?
Right.
That kind of thing. What's the mitigation I can do? I would say more times than not, honestly, it's the agency itself goofing it up.
Okay.
IRS or the states, maybe even more than half of the time it's the IRS or the states just making mistakes. And so we're calling them to unwind those mistakes and try to straighten them out. So it's a combination on that.
Right. Okay.
Yeah, it could be a form. Like, I see that a lot on, like, particularly on the Georgia side, like with credits.
Yes.
I see that a lot where it might be like a schedule where like you put the credit on line 10 or whatever instead of line 8 or something.
Right.
Oh
like my gosh.
And it doesn't get processed and you just have to send it back in. So
Okay.
I see that a lot too.
Good to know. Okay. So, of course, not all controversies are created equal. What kinds tend to be the most complex or challenging to work with?
I would say maybe exams are probably in general the most complex and challenging just because there's more detail involved, there's more records involved. Obviously taxpayers are more sensitive to exams because an auditor's coming in and saying, we're going to just kind of take a look at everything. These things are like 2-3 years old a lot of times. They can be older if they haven't filed returns and the audit period's still open for some reason. But in general, you're going back to, imagine saying like, I'm thinking of an example where somebody had a lot of travel expenses. I just had an exam where a guy had a lot of travel expenses. He's a real estate developer, was kind of going all over, traveling all over the place. These are all valid travel deductions. These are all legitimate. But then the auditor comes in 2-3 years later and says, go back and give me all your travel receipts that added up to, $500,000 worth of travel expenses. I need the receipts for all these hotel stays, the receipts for all the airports, all the gas expenses, the rental cars. I need receipts for all this stuff. I need an itinerary for why were you in Dallas on July 11th, 2023. That hotel that night, I see you have a receipt for a hotel, but I need to know why were you there. So, and he's like, well, I'm meeting with people about developing a site. Okay, well, I need proof. He's like, well, how in the world do I prove who I was with? He's like, okay, I was with, Joe Schmo over there, but like, how do I know that that's the guy who owns the property you want to develop? He's like, well, how in the world? It's very difficult to prove. So anyway, those are the more complex things you have to get creative about figuring out. Is there some way we can prove this out? Was there like some sort of business meeting? It was on your business calendar back then or something like that. Or maybe we're at a trade show. Okay, we can prove you're at that trade show. We have like a printout, like here's the trade show. We can show this is related. But a lot of those things is really hard to prove. So anyway, those are more complex because you get into like all kinds of detailed records, all kinds of detailed back and forth arguments with the auditor. Kind of arguing, hey, look, he's obviously a business developer. What do you think he's traveling? He's obviously going to travel around, So yeah, those are kind of, to me, the most complex is getting into like the detailed books and records type audits.
And I heard you say exams. So
Yeah.
Let's pretend nobody knows what that is. What is an exam?
Exam is just an audit. That's what the IRS calls an audit. States call them audits. The IRS tends to call them exams.
Okay.
So they call auditors examiners. It's the same thing.
Okay.
Audits, exams, it's all the same. But basically, it's just an examiner or an auditor from the IRS or State Department of Revenue coming in and saying, we're going to go back and relook at certain years. You can go back 3 years typically. So unless you haven't filed returns, you can go back further. But normally it's 3 years. So we're going to go back and look, let's just say at 2023. We're, you had a lot of deductions that year, for example. So we flagged it for review. So we're going to come in and we're going to pick a sample of, say, 50 travel expenses. And then, we're going to take a sample of these items of income. We want to see your W-2s. We're just going to go back and see all the support for that return, essentially. How'd you come to all these numbers, tie it all out, kind of prove, especially like travel expenses and things they really want to really hone in on. I've seen that a lot lately where auditors are really honing in on travel expenses, and they're also very difficult.
I guess you can kind of get really colorful on those.
So that's all an exam. It's just an audit. Come back and re-reviewing the return, essentially.
Okay, thank you
for the backup.
Thank you. Okay, so now here's one thing I think people always have wondered: is it harder to deal with the IRS, or do state tax departments give you the hardest time?
Depends on kind of what you mean by the hardest. I would say I've dealt with both for 10 years now, probably. And I would say, in some ways, I honestly think that the states are harder to deal with.
Okay.
That's just my opinion. And the only reason why, but there's pros and cons to both. But the IRS is a little more complex, in my opinion. The dollar amounts that they're dealing with are usually a little larger. So that creates more anxiety, more kind of making sure that you have your ducks in a row and all that. Having said that, there's typically like a defined procedure that you follow with the IRS. So once you know the procedure, you kind of know what to do, and both sides really have to follow it. The IRS auditors are bound by a certain procedure, you're bound by a certain procedure. Once you know the procedure, you're basically both playing by a set of rules, and you just follow the rules, essentially. On the state side, in most states, there's a lot less rules. They don't really have defined procedure unless you're talking about California or New York. California and New York have a little bit of procedure that usually mirrors federal procedure. They closely mirror federal in a lot of ways.
Okay.
But even is not as strict as IRS. But most states like Georgia, Wisconsin, I was dealing with recently, they don't really have like a ton of procedure that they're bound to follow, which can be good and bad for you. It kind of depends on what's going on. Like in a lot of cases, it's bad though, because the state can kind of do whatever they want. This is how it feels, at least sometimes, when you're on this side of it.
Right.
It feels like they do whatever they want, and they sort of just look at you and say, what are you going to do about it? And then you have to figure out, okay, well, now I have to protest and appeal and all this kind of stuff. But on the flip side, it also means that you can get a little more creative and say, okay, the taxpayer might not have sent us a notice within the required response time frame. And technically, we were supposed to respond within this time frame, but we have relationships with people at the Department of Revenue. I might call up somebody at the Georgia Department of Revenue and say, I know we missed the window, but just look at, you can tell, this is like an obvious case here. And since we have good relationships, if it's something really obvious, like a payment being moved or something like that, a lot of times they'll work with you. They're not looking for you to get hit with something that's wrong on a technicality on the state side. They'll typically work with you in a lot of states. So the lack of procedure can be good and bad.
Okay.
And I'm thinking of a Wisconsin case where it was bad, just as an example.
Okay, tell me.
Where I was working on an audit, sales tax audit, with an auditor for a big client of ours in Wisconsin. I'm working with this auditor going through, and all summer, this is a couple of years ago, we're going through all summer, I'm working with the auditor, blah, blah, they have to file these missing returns. We're me and the auditor going back and forth. We're in close contact, though.
Okay.
All of a sudden, the client gets like $150,000 levied from their bank account. And so I reach out to the auditor, and I'm like, why did they just get all this money levied? I haven't heard anything. Like, I didn't think anything was going on. We're working together.
Right.
And he was like, oh, yeah, I've been sending notices to the client all summer that they owe all these returns. And yes, I'm working with you on this audit, but you still owe all these returns, and we're going to levy, these notices kept progressing. Like, you owe this money, eventually got to, we're going to levy. And I was like, I've been working with you all summer. This period's under audit. He was like, well, those periods are outside the audit. So technically they're not covered by our audit. Therefore, I wasn't required to send you notices for those periods. I was only required to send them to the taxpayer. Well, the taxpayer wasn't getting their mail for some reason, so it got levied for these periods outside the audit. I was obviously livid with this auditor.
Right.
I was like, just as a matter of, I don't care what your rules were, just as a matter of like, common courtesy, like human, like just human interaction.
Yeah,
Why would
absolutely.
you not give me a heads up and say, hey, by the way, this is outside this audit, but I've been sending taxpayer notices, and there's something going on here. Here's a copy of the notice, by the way. That's what I think most auditors would and should do. He didn't.
Okay.
We ended up getting all the money. We ended up having to file a refund claim. We got the returns filed, got all the money back. All's well that ends well. But it's an example of, like, on the IRS side, as James could tell you, before they're going to levy a bank account, you're going to get all these notices. You're going to get a chance for a hearing.
Okay.
At the very end, you would have been able to file a hearing and saying, hey, we don't think we owe it because of XYZ reason. Before you ever get levied, the state, Wisconsin and Virginia, they kind of just levy and ask questions later. That's
Right.
the reputation they have in the practitioner field, is they levy first, ask questions later. So that's where a lack of procedure can really, really hurt you too. on the
Right.
state side.
Absolutely. Would you like to elaborate on the IRS side? Because
Yeah,
I mean, the
would,
state
'cause,
seems.
it made me think of a couple things. First of all, I'm talking about what's difficult. For some reason, I have found, and I guess it was obvious reasons, but there's a lot of emotion around this stuff.
Mm-hmm.
So sometimes you can be dealing with a relatively small dollar issue. There's not a lot at stake,
Okay.
but there's just a whole lot of emotion around it. And when people get emotional, sometimes they don't think too rationally. So
Makes
it leads
sense.
to some bad decisions, and sometimes before we get involved, those just bad decisions have already occurred. I remember
Snowball.
Yeah, I remember getting called into an audit one time that had already been ongoing. Client finally brought me into it, and by the time I got involved with it, the client had been representing himself with the agent.
Okay.
And they were just, I almost felt like I had to get in between them and referee the fight when I got to the office to see him that morning. There was bad blood between
Right.
them.
Absolutely.
And it was emotion. He was driven by emotion. He didn't know this. He didn't want to give them these records. Why are they here? It was just a lot of emotion like
Right.
that. And I had to get in there and defuse that. And it wasn't easy. So there's a lot of emotion around this when you deal with it. Even with small amounts, you'd be surprised. People just for some reason, particularly with the IRS, there just gets to be a lot of emotion around it. Now, I don't think there's as much with the state, but with the IRS, it typically is. And I saw it when I worked with IRS, so I've seen it on both
You've
sides.
seen both
now.
sides.
Yeah, for 38 years, I've been on one side or the other, so I've seen it both ways. But Chris was talking about
dealing with an auditor, the mail, maybe the client not passing the mail to the accountant.
Right.
Kind of thing. We had an interesting case a few years ago. We had a client, and he went to his bank, and he goes up to use the ATM machine. He's a very wealthy individual. He
Right.
had lots of money.
He was okay. He was doing all
he
right.
He'd have a full $1 million on deposit, but he probably was halfway.
Right,
there.
okay.
A lot of money in the bank. So he goes up with his ATM card and puts it in. And you get some kind of message after you put in his PIN number that there's no money, zero balance.
Nightmare.
And so he walks in to tell, oh, wait a minute, I'm so, they know the guy.
Right.
He's a pretty big customer of the bank. And they look and say, well, there is no money in the bank anymore. The IRS just served a levy, and we had to send a check it was in the hundreds and hundreds of thousands of dollars to the IRS over back taxes. I mean, he had to have several conversations, I guess, to get to this point.
Absolutely.
To learn this. But so we got a call. We didn't know anything about it. We weren't on the power of attorney at the time. We get this call, our client's missing $300,000 or something like this.
Right.
So I remember getting a hold of them and saying, well, what do you know
What is
about
happening?
this? What do you know about this? I said, well, nothing. Well, were you getting any mail? Well, yeah, we were getting mail. Then my next question I asked is every time, well, did you open the mail? No.
Then that where it gets interesting.
No, we didn't open it. Okay, well, there's multiple reasons.
All right, here we are.
The most common reason is, well, if you don't open it, well, it'll all just kind of go away. So in this case, they didn't open it because they thought that we were getting the mail for some reason. Well, we weren't even aware of
Right.
any tax issues with them. They hadn't put us on a power of attorney to where we could even receive mail
Right.
from the IRS. We couldn't even call the IRS at this point. We had no knowledge of any of this stuff. But for some reason, they weren't opening the mail. And neither he nor his wife were opening the mail. So $300,000 go missing. Well, in the mail, when we looked at it, there was two opportunities
to have kept all this from happening. The first opportunity was very simple. We ultimately got all the money back. But the first opportunity was a letter from the IRS saying, hey, we think you owe hundreds of thousands of dollars over this issue. Now, what say you? And we're going to give you 30 days, 60 days, whatever it was to respond. They didn't owe the money, and if they just simply responded, we could have done the response form in an hour or two and ended the whole problem.
Right.
So that was opportunity number one that was missed. And opportunity number two was, before they can go down to the bank and take the money, they have to send a notice to the bank, and the bank can't do anything for 30 days. And then during that 30-day period, they have, at the beginning of it, they have to send a notice to the taxpayer saying, we've got this problem, you owe all this money, and we're going to go to your bank, or we're going to do things like that within 30 days unless you file an appeal of this. And we could have, had we known about that, filed an appeal under the contention that it isn't owed, and here's why it isn't owed. We do that all the time. And had the appeals officer work with us to get the whole thing straightened out. So there was two opportunities missed, and the second opportunity resulted in hundreds and hundreds of thousands of dollars going out of the bank. Right. Now, ultimately, kind of like what Chris's case he talked about, we got the money back.
That's the better thing.
But it didn't come back in a week.
Right. It took a moment.
I mean, I've had guys call me up and say, well, they owe me $80,000. Tell them, see if you can get a check cut by tomorrow. I'm sorry. It doesn't happen.
There's a process. I'm sure there's a process.
Yeah, I mean, we know how to speed it up as much as possible.
But it won't be tomorrow.
No, it won't be tomorrow. This thing took months to get straight. Right. Many months. So. But that's that's the thing about the emotion in the mail. I don't know what it is, but I deal with that more than anything. So we talk about difficulties. Right. Sometimes it's just real fundamental. Okay, let's not get emotional. Let's think through it rationally. And oh, by the way, are we looking at all the mail that's coming in and dealing with it?
When you brought up power of attorney, after someone goes through something traumatic like that, do they typically go that route of giving you all power of attorney so they can kind of avoid that route?
At that point, we're sort of on record. Okay. And we can file these powers of attorney. And we try, the way we do, Chris and I do, is we try to file them for a broad period of years and cover whatever tax issues we think could arise. Right. And so without getting into too much details and boring everybody about it, we basically try to file something that kind of keeps us in the loop.
Right, keeps you in the loop,
and we
for
get
sure.
Copies of the stuff. So sometimes we can see it and notify them, hey, you're going to get, if you hadn't already got it, you're going to get a notice that says such and such. Would you like us to go ahead and handle it? Yeah. So we're sort of out there first. But unless we're on file with the IRS of the various states, we're not going to.
You're not going to know at all.
So it's important we always tell people, open the mail. It doesn't get better with time. Then these things your neighbor tells you generally aren't true. Like,
it's like, it'll be fine.
Your neighbor's going to tell you just don't have to cooperate.
Right, no, they'll leave you alone.
Yeah, just don't give them anything. Well, guess what? If you don't give anything and you got an audit letter, all those tax credits and deductions you took go to zero, and you're going to owe that much money to them.
So don't listen to your neighbor.
No, do not listen to your neighbor.
No.
I'll tell you a funny story about that. I used to go out and do public speaking with IRS, do some training, and I was paired up with this other guy, an agent out of Colorado at the time. And we were out talking, and I was giving him my old neighbor story. I was talking to actually a group of military people that were going to be doing tax returns on these various bases during tax season. And we were the trainers for these guys. We were teaching them how to do it. And they were going to go out and do tax returns. And so I was kidding with them about, because a lot of them would ask questions. I said, "Oh, you've been listening to your neighbor again." So they got to kidding with me about neighbor. And the big joke in the class was, don't listen to your neighbor. Your neighbor's he's got it.
Probably got it worse than you.
Correct what he's saying, but he's off base. He's wrong. Well, this fellow from Colorado, he pulled me aside after class. He said, James, he said, I agree with everything you say about neighbor, but I don't know what it is. But in Colorado, it's always the brother-in-law that's giving the advice. So
you got to add that in the conversation.
So I always tell everybody, don't listen to your neighbor in 49 states, and then don't listen to your brother-in-law in Colorado.
Right.
So.
Listen to you, not the neighbor, not the brother-in-law. Whoever else, don't listen.
Your neighbor's going to give you some sort of story about all this stuff.
So everybody, read your mail. Open your mail, read it.
Speaking of that, we may run into some notices coming up. I've seen people kind of on social media talking with the government shutdown with the furlough, that if you don't file by 10/15, they're not going to be there. To send you notices and stuff like that, you can get away with it for a while. And
they are going to be there, by the way.
Right, they're not going.
This morning, they had money to run the budget through last night, which was October 7th. IRS did. They had some funding, multi-year funding. They compressed it. It did 5 business days. Starting today, this is being filmed on Wednesday, October 8th, they're out of money. But they are compelling a number of their people to show up and work without pay. And I guess the thing is, they'll try to get them back pay or what have you. But yeah, they're there, and they are going to be processing returns, and they haven't waived any requirements to file or whatever.
Like you got to pass, but not really.
Yeah, all the rules still apply. You got to file, you got to pay, you got to do it on time.
Right.
So. Even if they were gone, they're going to come back.
They are literally not going anywhere.
They'll come back and send you another stuff.
You do not have a get out of jail free card at all. No. This episode of Beyond the Ledger is brought to you by Bennett Thrasher. Learn more about our tax controversy and advisory services at btcpa.net. Okay, but before we go further, I'd love the listeners to get to know you both a little bit better. So what experience or roles prepared you all to get to this point?
For me, I've just kind of I've been doing this for 10 years. I went to law school back in, 2014 in Maryland, and then I got an LLM at Georgetown in tax. I'd say that was one of the biggest things that kind of got me started on tax, and Tax Controversy was that program. It's a 1-year program, but it was all partners at big firms. So there was like a partner at Eversheds Sutherland, a partner at KPMG, a partner at places like the EY. Like I remember one of my professors was the guy who started like the indirect tax practice at EY. So you're learning from like all these practitioners in the evening. It's an evening program where you go there for a year, and in the evenings, these people who are partners of these firms come and teach you all this stuff. And I had one of them tell me, you're learning so much practical stuff. It was really great. And I remember one of them telling me, he was like, the reason why we teach you all this practical stuff is because we want to hire from this program. So we want to teach you what we would want a first-year person to know. Okay. And so then when I started my career at a big national firm here in Atlanta after that program, I felt like I was ahead of the curve, basically. It's like, of course, it only takes you so far. You still got to like get tons of experience after that. Yeah. But I definitely felt like I came in more like a second year, third year type knowledge because of that. And then that helped me, I think, kind of start building like a base earlier on. Right. And then started getting into state and local tax, and then IRS working with James, and then Tax Controversies. So anyway, it's just like 10 years of experience of, working with different, just amassing experience basically with different state departments of revenue. There's 50 of them you got to learn. IRS, just kind of, just amassing experience over time, trying to learn as much as you can.
You always got to continue to learn, and it helps you just be more efficient and effective when you're handling these types of cases.
Taking on hard cases, more challenges too. If you don't know, that's like something that I feel like you should go, okay, well, I want to take that case then, so I don't know how to do it. So that's kind of my approach. So.
What about you, James?
Well, I got into it, pretty simply, worked for IRS for 29 and a half years, and I was coming up on an age where I basically could retire from them, and I had to make a decision. Do I stay? I remember there was a guy that was notorious when I was at IRS. He wouldn't retire, and he got to be in his 80s, and he was still working. And I thought, well, do I want to be that guy? Or do I want to leave when I can and then go out and do something for clients with all this knowledge? I've got all this sort of insider knowledge, if you will, and I can put it to use for clients. So I did some networking, and ultimately, matter of fact, it's interesting. This is being filmed in what we call the Founders Room. Mm-hmm. And I did my interview to come to Bennett Thrasher in 2017 in this room. So, full circle. Anyway, I came in, I always tell everybody, they brought me in to set up the tax controversy practice because I had worked at IRS and worked myself up into management with them, and had been in a number of different roles at IRS, including as a revenue agent doing audits, and I worked in their very large business international arena, and then I became a manager in that arena for 6 years. And I also had stints doing other stuff, including some training, public speaking. I even went overseas with the military and State Department program to train tax volunteers, for the expatriates and military overseas. So I had a number of things I did with them, so it sort of qualified me to come in and get the practice set up. I always tell everybody, it was an army of one for a while. It was just me. And over time now, we've expanded the practice. It's Chris and I, and then we have two other associates with us that work full time. 3 lawyers, and I'm a CPA, so we've all got the credentials to represent clients. So
okay, I know you guys touched on it a little bit earlier, but bringing it all to life, can you share a story or two about a particular difficulty or a difficult tax controversy you and your team helped resolve, and what came out of it? Like, what made it stand out?
I thought of a couple I think of a couple off the top of my head that stand out. There's one that's kind of brings all of them together, I would say, like all the different categories. James talked about earlier, accounts management, penalty abatement, stuff like that. There's an estate tax case, and it's like one of the more material ones we've ever seen. It's a $6.5 million assessment from the IRS to an estate. And basically, the whole dispute centers around whether they timely filed their required estate tax return. You have to file within 9 months of the date of death, your estate tax form, and then pay in whatever you think is owed. And this was like a very significant estate, tens of millions of dollars. Right. They ended up owing like $6 million. They paid in enough, I think it was $5 million. They paid in enough timely. The problem was Hurricane Helene came. And so when Hurricane Helene came, the filing deadline got extended to May 1st from the fall. And so, but IRS isn't recognizing it. And so it's being treated as though they never made this payment. And they actually aren't recognizing the hurricane relief, but they're also not even recognizing the payment that was made. So it's like, there's like multiple layers here. So anyway, they got a notice for the full tax due of like $5 million, $1.1 million in penalties, or $1.3 million in penalties, like $300,000 or $400,000 in interest, something like that. It ends up being like a $6.5 million assessment. So anyway, this is one where it's still pending with IRS, but like, not to like count my chickens before they hatch, but relatively sure this is going to be resolved favorably, and everything's going to get waived. This is going to go to a $0 notice, because this is an example of good record keeping. We have the death certificate showing the date of death, so then you can calculate out the proper extended due date, or the proper due date. We have a copy of the extension, a copy of the check that was mailed, and the stamped certified mail copy showing the date it was mailed. We have the hurricane relief. It's all buttoned down. Right. So that's an example of needing good record keeping, knowing how to reply to the IRS, not getting intimidated by a big notice and saying, "Oh, it's a big dollar amount. What do we do?" Whether it's $6 million or $10, it's the same. It's all the same procedure. You just got to follow the procedure. Dot your I's, cross your T's, get the certified mail receipt. That sort of thing. Which, by the way, for anybody who's out there who mails anything to IRS, I see this all the time. When you get a certified mail receipt, you need the stamped copy from the post office. I feel like that's something that I hear this from clients all the time, from practitioners, other practitioners even. Right. I feel like because everybody prints postage at home nowadays, you think that certified thing is good. It kind of means nothing to IRS.
Is not. It is
because
not.
You can print it off anytime. It doesn't mean that's when you actually mailed it. So anyway, you need the stamped copy. Luckily, we have it here. So anyway, it's a pretty airtight case.
So you got your ducks in a row.
It brings together all the categories of accounts management. It's really an accounts management case, plus a penalty abatement case, plus an erroneous interest assessment case. It's kind of all in one.
It is layered.
Yeah, it's layered and kind of all in one. So that was kind of a big one I was thinking of.
What about you?
I had one, and it was when I first came here. and it involved the area I'd come from. I mean, the type work, and revenue agent type work. And we had this revenue agent in the office, a very tough agent. And we got into a very, what you call tax technical kind of dispute over some tax issues and so forth with a very wealthy, very big client, a lot of investments, the tax treatment of these numbers. So the argument wasn't over, "Oh, show me all the pieces of paper behind this number." It was more, okay, we understand the number, but the tax treatment you're giving the number, IRS didn't agree with. So we went back and forth with the guy. And we finally got the tax part agreed to. Okay, we all agreed that, IRS loosened up on some things. We agreed that some things got, called wrong. There were some mistakes made back, by the client and so forth, and some of what we were given to work with. So we got all that resolved, and everybody said, well, the tax is fine. But then the agent went out and decided he was going to put a penalty on this thing. So, well, this shouldn't happen. I'm going to put a penalty on, a very large exam penalty. It's close to $100,000. So I said, well, we'd like to meet with your manager.
Right.
I used to be a manager, and I used to do these managerial conferences over things like this. Okay, I'll set that up. So I remember looking at his write-up on this thing, and I realized he had made a procedural mistake. I used to be a manager actually hearing those kind of cases. And I thought, okay,
you kind of made a mistake to look for,
He was not supposed to do it this way. He was supposed to do it this other way. And I think that I can get this penalty removed over the procedural error. And I wrote up a little memo. And we went into the thing, and the client had an attorney that came with us, and one of the people here at the firm. So I think it was 3 of us in there from the client, from the taxpayer side. And then the agent and his manager were in there. So I guess there was 5 of us. And I remember the manager was sitting right next to me. And she says, well, James, what's your opinion about all this and so forth? I said, well, I wrote you a little memo, and why don't you read it? And she read it, and she looked up at him, and she says, I'm going to remove that penalty. And I'll never forget, he looked at her and says, well, we can talk about this. And she says, no. I'm removing the penalty.
Absolutely not.
We were in there about 3 minutes. So
smart move.
So yeah, it was a tough case. Normally on a penalty like that, without a procedural error, you probably wouldn't have had a chance.
But with your background, it helped you kind of identify.
I saw it right away. It was just one of these things that's buried deep in the gazillions of pages of IRS guidance that you weren't supposed to do to bring that case forward. And I knew about it.
Right.
So every now and then that experience does come in.
Absolutely it is. Part of everything you do, I'm sure.
So that's one of my favorite success stories, because I've got a picture of the audit report that the guy gave me, and it has this almost $100,000 penalty on it. And then, of course, I take all the names off when I show it and everything, but then I've got a picture of one where the penalty thing is blank. Or there's a big zero there.
Right.
I don't think he liked doing that. Fortunately, I didn't see that agent for a while longer, so I think he was steaming for a while.
But a win for you, though. You and your client.
A procedural case where it's like, where we had kind of a procedural here in Tennessee. This one's technically still pending because this literally just happened. I just thought of it while you were talking.
All right, throw it in there.
But basically, it's like an issue. It was like one of our largest clients here at BT had an issue in Tennessee where we requested, with our state and local tax team, help request essentially a variance in how they calculate their sales apportionment in Tennessee. And you can request this variance, but you have to exhaust all other administrative remedies. Essentially, it's like a last ditch. Yeah. Like, if nothing else you can do under the statute works to fairly reflect your activity in the state, you can request a variance and propose like an alternative method. So they proposed an alternative method. The method actually makes sense. They should be able to get this variance. And instead, they got a denial letter back. But the denial letter only addressed like their net worth tax instead of their income tax portion, the portion that's calculated on income in Tennessee. And so it really didn't address what we were asking is the point. Like, they kind of, it'd be like you asked for B and they said, no, we deny A. You're like, well, I didn't ask about it. What are you talking about? You know, we didn't even ask about that. And so anyway, we reached out and basically they said, yeah, it is what it is. We were denying it. And then, well, normally you can appeal within 30 days. So there's an informal appeals process in Tennessee that I've done many times. And so we reached out to the appeals office and said, hey, here's a denial letter here. It doesn't really give any procedural like remedies, like how would we appeal this? And so I said, is this something we can appeal to your office? And they said, well, actually, no. The Commissioner of Revenue delegates authority to appeal, and they haven't delegated this authority, so we can't appeal it. The only thing your client can do is hire an attorney in Tennessee and go sue a district court, I think it's Chancery Court in Tennessee, and go sue there. It's kind of like district court, go sue there, and then you'd be able to sue over it. This is like $1.5 million of tax per year forever going forward, essentially, so it's probably worth it for them to go do that. But we were like, this is just ridiculous, though, because this is all... And anyway, I started reading the denial letter in more detail. Right. And I started realizing that what they did, the state, is they misinterpreted something they just misinterpreted something, basically. For some reason, they thought we were talking about net worth when we were not. And we have proof, all this proof that we were not talking about that. This was all just a big mistake. And I started thinking, we've had to figure out a way to get to the appeals office. So the way we did it is they had a notice of tax due that had been appealed. So we went ahead and had the appeal. We told them, hey, even though we know we can't appeal this credit denial, we still want to have an appeal on the original notice. Right. And they said, okay, fine, but don't talk about the denial. So we get there and we go, of course we're going to talk about the denial.
Right.
So we get there.
That's why we're here. We're here.
So, but the way I pitched it, though, to the hearing officer was, we know that you can't reverse the denial, but I think this was all just a big misunderstanding. And I think if the person who handled the denial took another look at it, I think they would agree that this was all just a big misunderstanding. And if they can take another look, so instead of you ruling on it, could you facilitate a discussion between us and the person who issued the denial? And they said absolutely. Luckily, they had them on the call. On the hearing, they were already there because they issued it, so both sides were on the call. Right. They were like, why don't you guys just talk about what the dispute is? And the guy immediately agreed, like, yeah, this was just a big misunderstanding. He was like, we apologize that if we misinterpreted something, of course we had to be deferential back. Like, well, no, we might have, hey, let's not play the blame game.
Right. Let's see how we can figure this out.
Let's just figure it out. So he said, well, send me, kind of just a little small write-up of what you want to do and what we need to do, and then we'll take another look at it. He was like, for sure, we don't want to do something wrong on a misunderstanding. Right. So I'm like 99% sure they're going to grant the variance at this point. Obviously, the client's very happy. Everybody's happy. The example, though, is like, to me, it's like a good creative procedural thing of like, we technically couldn't appeal the denial, but we kind of had to backdoor into an appeal. And instead of asking for a reversal, we just asked for sort of a facilitator, a discussion to get a reconsideration, which worked. And that's an example too on the state side of like
very creative. Yeah.
Procedure of like, they're willing to do things. So anyway, it worked out great on that one.
Yeah, Chris brings up an interesting point. I remember when I first started in this years ago, I had breakfast one morning with a very prominent tax attorney who did at his law firm what I do here at our accounting firm. He basically led the tax controversy practice, or he was very high up in it. I never forget him telling me, he said, James, you're going to have to deal with everything that shows up, all kinds of tax issues, all kinds of very technical things. Right. He says, you're really not going to be expected to know the law as well as the people at your firm that specialize in that area. But what you are expected to know is procedure. Mm-hmm. You're going to have to know how to navigate that case through. And like Chris says, sometimes there's a backdoor way to get a resolution, or there's another way to get the way to get a second bite of the apple, the way to basically get what looks like a closed case and a done deal relooked at.
Right.
And so that's what we know. We're procedure people.
Yeah, that's an example of why it's good to have like a controversy. A lot of firms, honestly, don't have controversy groups that just do nothing with controversy. Some firms do, some don't, but a lot don't, honestly. And then it's like, I was just talking to somebody about this yesterday. The great thing is you kind of compile a lot of experience and knowledge in one thing, because like it's a lot of this is just trial and error of like, I tried it this way, it didn't work. I tried it this other way and it worked. And you just kind of like figure out what works, what doesn't, and then you kind of get ideas too of, hey, this last time that didn't work exactly, but based on what they told me, I think if I did this other thing slightly different, I think it would work next time.
Right.
Instead of like kind of being new to it every single time, if everybody was kind of handling their own, it's kind of a nice way to kind of just like compile some knowledge and some trial and error and all that into one. And,
we've come up with our kind of own internal procedures, and then there's four of us that work in it full time, and some of us are sort of acknowledged amongst the four of us as the best for that particular issue, that kind of thing. Yeah, one of our guys, Luke, is particularly good with information return penalties. And he's figured out, these are tough things to get resolved sometimes. That's where IRS is telling an employer or a business, hey, you didn't file a bunch of information returns like the Form W-2s or the Form 1099s, things like that payors have to file. He's particularly adept at working those cases. He knows all the little ins and outs, and he's been through so many of them, he can sort of look at it and go, okay, on this one, we really need to talk to him about this a little more, or I really need to work this angle or whatever. Right. So, but that's pretty much what we are, is we know the procedures.
We
know enough about the law, obviously, to talk about it. Yeah. But if there's some real hyper-technical area in the law, we're going to know the procedure, and then we're going to reach out to our partner here, our associate here at Bennett Thrasher, to get a little bit of help with structuring the legal argument, maybe, or understanding law a little bit more.
Right.
And then getting that into the procedure that we do know.
That's great. That was such an insightful look inside the world of tax controversies, and a reminder that the key to resolution often lies in experience, preparation, and understanding both sides of the process. James and Chris, thank you both for sharing your stories and insights, and I can't wait for you guys to come back.
Okay, thanks for having us.
Of course.
If you enjoyed this episode, make sure to subscribe and check out more conversations like this at btcpa.net/podcast or wherever you get your podcasts. You can also follow Bennett Thrasher on LinkedIn and subscribe to our newsletter for new webinars, insights, and future podcast updates. See you next time.